stage, a credit card, personal loans, insurance, investments, etc. So basically, as you see, we have a very robust growth across the recent years. We basically serve the lower income segments of the population. 85% of our customer base comes from the C, D, and E segments, which is pretty unusual if you compare to other incumbents, Brazilian banks, who are more located in the upper segments of the population. And so far, we offer a wide range of products. So we have the digital account, we have the credit card, personal loans, we offer payroll secure, salary secure loans, investments, insurance. We also have a platform for very small entrepreneurs to open their company. And yeah, of course, we're facing now the challenge of proving ourselves sustainable, because the scale obstacle, the scale challenge has been surpassed. Now we need to prove that the business model is sustainable. We can be also, in parallel of serving these lower income segments, we are also capable of generating profit and sustain the growth of the company upfront. So it's a challenging environment, because it's not easy to fight against the large incumbents. You know, it's definitely a hard mission, but so far we're doing okay. We're being capable of growing a lot our customer base. We're improving our processes, we're improving our policies, and our aim is to keep growing in a sustainable way for the future and be positioned as the most important working class bank for our customers who are predominantly lower income customer base.
Thank you, Victor. It's amazing to see the scale, how much you've grown, and how many customers you cover in just a short time space. Perhaps we can move to you, Raphael. If you can present also your digital bank to set the stage of the discussion. Thank you.
Okay, thank you. Is this one? Okay. Let's see. Just having some technical. In the same I think process, and I think like I don't know if the presentation.
Yeah.
Okay. But okay, and in Mexico, I think you're going to have like a different challenge than Brazil, because you're going to see that 51% of the population doesn't have a bank account, and again, like more than 80% of transactions are still made in cash. So maybe a couple of countries of you like might have some similarities, like, but at the same time, I think 80% of the population has some smartphones and are using like internet access to their. Yes, this one. I don't.
It's too scale.
Yeah, I think the scale is. This is the initial one, but yeah, I think. Okay, I think this slide's a little bit like expanded, but I think I can take it from here. But so yeah, as I was mentioning, like 51% of the population doesn't have bank account. More than 80% of the transactions are made in cash, and like 80% of the 80% of the population has mobile access. So I think it's like. Okay. So I think maybe similar as a little bit of Jamaica, like we do have like a perfect ecosystem for waiting for disruption in Mexico. Yeah.
No, absolutely. Sorry.
Yes. And what happens is that I think this was something, the data that not only the local entrepreneurs, but I think even foreign entrepreneurs like have seen like an opportunity for disruption. So like Mexico nowadays, in terms of fintech landscape, not only have the local companies like Klar that I'm here representing, but we also have the Brazilians one, like Nubank, expanding into Mexico. We have the Argentinians, we have the Chinese, we have the Russians. So like everyone is coming to Mexico trying to get a little bit of this like untouched, like I think, market share. So the potential is there, but I think, and the biggest challenge here, I think, it's cash. I think the society is still like really like more than 80% of transactions are made in cash, so physical. Like people in Mexico are paid twice a month, and like at the beginning of the year, at the beginning of the month, at the middle of the month. And every, like, those period of time, you see like big lines in the branches for people to basically cash out their income and put in like, I don't know, like under the mattress, like, so, but getting out of the digital, like the financial system. And that's, I think, one of the challenge that the fintechs, we are trying to help and to support. And Klar, I think we are a little bit like, I think, younger than Neon. I think we just started like 4 years ago. And we have basically, I think, two strong products, like a savings account with unlimited free transfer, like to any institutions, like real time, so no maintenance fees, and rewarding up to 14% a year on those deposits. And a credit card that basically people can apply online in real time and receive like, and available for everyone, for like unsecured line, a traditional credit card, or for like a secured line. Yeah, for those customers that are still like, maybe don't have the credit history necessary, but they can build with us. And again, we can also just burst a portion of that credit line in cash, because again, in Mexico it's still massive, it's still needed. And I think it's gonna take time, I think, for the society to digitalize itself and get out of cash, but I think so we need to support that as well. Just not take longer here, like just a couple big numbers about the company. Like we have been like more than 3 million customers has been managing their finances for Klar. We have been really like providing a really great experience overall with NPS of 90 for our credit card customers. We have a relatively small team of 240 people, and I think we have raised like more than close to $200 million from like top tier investors I've seen included. And I think we have just started. Like I think there's a lot to do in Mexico. I think we wait to see in Mexico the same disruption that happened in Brazil for the past 10 years. And again, I think we want to be part of that.
Thank you, Rafael. So maybe we can talk a little bit about the challenges that you face. Mexico and Brazil are very different markets from developing markets like the US and UK. And what are some of the challenges that you're seeing in digital banking, especially from context of how to apply that to doing the same thing in the Caribbean? Victor, do you want to start?
Yes. Actually, one big enabler for us to enter and disrupt the market was the access to mobility technology, etc. In Brazil, we have basically more than 2 mobile cells per inhabitant. So the population really became digital and uses the mobile as a way of doing business, as a way of communicating to each other, etc. Strong users of social networks, etc. So this of course made our journey easier, because we had on the end a customer base who is eager to access and make transactions digitally, and you know, if 20 years ago cash was the most important mean of payment in Brazil, today probably it's separated by credit cards, by PIX, which is the central bank transaction, or even by debit card. So it's easy, even if you go to the countryside of Brazil and you want to make a payment, very common that it's not going to do by cash, very common. So this enabled the digital banks to enter in the arena, offering initially a digital account. So digital account without any type of services, etc. And then on a later stage started to create around this digital account a ecosystem that provides credit, provides other types of products. So and the other enabler was the fact that Some years ago, probably, as I mentioned, 40% of the population didn't have a bank account. So you have a population which is strongly digitalized with their mobile phones, etc., and a good part of the population who is not served by the banks because the banks, they were not prioritized by the banks. They could be there, but the banks really didn't care about this lower income. So in the end of the day, the technology enabled us to do this job. So you can do your know your customer through the phone. You have all types of face recognition, access to documents. This can be done online. This can be done without going to a branch. So this really enabled not only our business, but other businesses in Brazil which are similar to ours. And today, this is a reality. If you go to Brazil, it's very rare to find someone who don't have at least one digital bank account, rather than the incumbent account. So this is something that was being popularized at most. So everybody has a bank account. Of course, that the challenge is provide more than that. Credit is a big challenge, and I think we're going to talk about in the next questions. But in terms of establishing ourselves, I think technology enabled us to do it, and you have also a population who was eager to absorb new technology, so was not afraid of using it as their mean of payment, their mean of doing transactions.
Sure. I think a little bit as what I mentioned, like in terms of cash, I think cash would be the biggest, I'd say, not enemy, but I think the biggest challenge, I think, for Mexico to become, I think, for the digital and fintech to be, I think, more widespread. I think, and that's also a lot, because the majority of the population even do not trust in the traditional financial system. Like, so what 50% or 51% of the customers doesn't have a bank account. So it's really common to see traditional people, like normal people that are providing some service, don't have a bank account, and then they have like a sister, they have like a parent that they have, so you can pay them for transfer the money to that account, and then between themselves as a family members, I think they rearrange those money flows. So I think we're gonna have a big challenge there is about like gaining the trust of the population that digital banks and fintechs are an option, so they can trust their money with us. And I think from my perspective would be two ways. One is providing some better services, better benefits, being competitive, like I think paying like good rewards on their balance, providing credit as well, like so have some good credit options like credit cards, personal loans, and so on. So I think like the challenge is, and again, and given that many people as well are underbanked and so on, I think those fintechs would have to be smart on how to underwrite those customers, leveraging alternative data sources, because those people would not live in the traditional system with bureau information, bureau records. So I think that should be another big challenge as well, I think, to be successful in Mexico.
No, thank you very much. So we've heard quite a bit about the unbanked and the underbanked, and this is supposed to be the big promise of how to close, fintech and digital finance is the big promise, and we've heard that. But can you give us a little bit more, like what are the segments you actually target in these areas, and how do you reach those customers? You're saying they're not in cities, and what kind of features, what kind of products? You talked about some of them, but can you maybe go into a little more detail on that?
Yes, actually, most of our 2/3 of our customer base are composed by micro entrepreneurs. I mean, taxi drivers, the guys who sell stuff at the streets, cleaners, people who produce their own income with their own work without being from an employee of a formal company. So this composes more than half of our base, and we nowadays we have 30% of organic acquisitions. Now we are already known, so people search for us, but we're still doing the traditional digital searching through Google, through Facebook, Instagram, whatever. to actually collect the people, the traffic of the people to our application, and then start doing business with those guys. The unbanked population was clearly one of our preferable targets in the beginning. As I mentioned to you, we came from a cash-based society to a credit card, debit card society, and now everything is under a digital, at least a digital account. So 5 years ago, if you hire someone to do a small job at your house, or if you go take a taxi, etc., people rarely would accept anything rather than cash. So they would get cash. So today, they don't want cash. If you want to pay a taxi driver by cash, you say, can you give me a Pix or can you give me a credit card? Also for safety reasons. So they don't carry cash in their pockets anymore. So this is something commonly widespread across the country. So it enabled us to reach the unbanked population, because now it's easy. So in the past also, the opening a bank account was something viewed as bureaucratic. So you need to go to the branch, get your documents. So you can do this, everything, in your mobile phone. So without, you are few clicks away of opening a bank account and then start transacting. So it's very simple, it's very convenient. So this gave us the possibility to reach the former unbanked population, because I wouldn't say today that the unbanked population is very large in Brazil. It's probably a residual population, because everybody who wants to have a digital checking account, they can have. The second step, which is as important as the first step, because for us as an institution, it's not only having the customer transacting with you, we must be profitable. So we must provide services and products that also have a counterpart in profit for us. And this is not obtained only by a single digital account, which is non-fee based, right? So we need to surpass the obstacle of granting credit, which is the need of this population. So this is where we are right now, expanding our credit features to our customer base, with the important observation that as it is a lower income customer base, it's also a riskier customer base, and we must take care of that. We must take all the prescription to avoid, bad surprises in terms of P&L. So I would say that we are at this moment facing not the challenge of bringing new customers, bringing unbanked population to our base. This has been overcome. We are facing the challenge now of providing those guys with credit products in an adequate way, so they don't get over-indebted and we don't get with delinquencies above the target we need.
Thank you. In Mexico, they're more underbanked, the segment. So for you, how is that? How is it? What are you targeting, and what products are the most important? Thank you.
I think I just want to echo a little bit of Victor said. I think going to the unbanked as well, and as a company, I think everyone, all those, as I mentioned, the Mexicans, the Brazilians, the Argentinians, the Chinese, everyone, I think is targeting the same population, the same 51% of unbanked. But again, it's not easy. Again, delinquencies rate are high, and have to deal with that. So it's a little bit of, I would say, a challenge on, okay, we're talking about the subprime people, and cannot overcharge a huge interest rate on top of that. I think doesn't make sense. So you have to become really good on how to assess credit on those customers to make it happen. So the equation, the mathematics, so the company can survive as well. So I think that's the biggest challenge in Mexico. And in terms of how we're reaching those customers, I think it's not much different as any other digital bank. Like most of the case, we start with digital channels, referrals, so the customers also refer their friends and family once they have a good experience with us. But I think it's important to highlight that usually there's a cycle. Okay, so usually when we launch a digital bank in a new country, the first people who actually apply are people who are tech savvy, early adopters, people who are following those trends and those news and so on. And then actually in the second wave, it becomes the more the more actual unbanked population. So what I've been observing is that as time passes, as our customer base grows, like more and more customers are like applying for their first credit card with us, or that they actually like coming to the financial system through Klar. And again, that's a process I think that the whole industry like pushing that, and it's a matter of awareness as well. Like a bunch of those potential customers that don't know that we exist. So I think there's a lot of work on guarantee that the digital banks are like advertised and so on, a bunch of the customers and the population knows us, and then they try us and get out, and then you can basically get their trust, and then I think they convert into loyal customers.
Thank you. So maybe we can move to regulation now. We often hear that regulation can either be a real enabler for making this happen, or making fintech and digital payments happen, or it can be quite difficult. What has your experience been in terms of regulation? Like what regulatory regime do you work under? What has your experience been? And maybe attached to that, what can central bankers, what role can they play in making sure this is right, especially to allow you to compete with those large incumbents that you mentioned earlier? I don't know, maybe reverse it and start with you, Rafael, in Mexico.
Okay, perfect. And then I think Mexico has such a unique circumstance because I think a couple of years ago, a fintech law has been approved that basically allowed to create a new category of companies. So basically in Mexico, there's three I think, regulatory, let's say, entities you can set up. Like one is this IFPE, that's called basically the fintech one that you can collect deposits and can give credit, but those things don't connect to each other, so you cannot use those deposits to fund the credit receivables. So it's a little bit like, I think it's good for companies to start operating, but I think it's not sustainable to scale like a proper like credit operations, given that you cannot leverage deposits to fund those credit receivables. The second one, that's basically the cost of people, that's basically like popular financial societies, that's the translation for in Spanish. It's basically like a mini bank, so it's a less regulatory capital. You can actually provide consumer lending, deposit debit accounts that can rewards, can pay interest on those deposits for customers. You can use that money to actually fund the credit receivable, so you can actually operate like as a bank. We cannot provide all the service as a bank, but I think the most relevant ones that you can provide, and that's actually what Klar is right now. And then you have the traditional bank that can basically have the full suite of products that traditionally has. And I think, and in Mexico, I think it's also a process that I think that Brazil had a couple of years before. The regulators are learning how to deal with this new wave of fintechs, and everyone basically is looking for, at least on the local market, trying to acquire an old SOFIPO, like because it's easier from the regulatory standpoint to like approve and do the whole diligence on the merge, and then actually filing from scratch like a new SOFIPO entity or a new banking license and so on. So I think the approach has been that. So it's a little bit interesting now in Mexico because most of those SOFIPOs that basically was small, like those financial institutions, small on the rural areas, has been like now like poached by all those fintechs that have been actually with some cash from international investors, like, and basically they're looking to be acquired and to basically to be this arm, the financial arm of those fintechs to help them expand their potential. Like, so the point is that, so I think, and now I think the regulator is studying that, and now a couple of them then became too big, now transitioning to bank one as well. Like, so I think it's something that is really unique going on in Mexico right now that I think it's worth, studying this phenomenon and trying to get the learnings. Yes, I think the regulator is learning as everything is happening at the same time. So because it was a wave that came in, like, and now I think everyone has to manage. But again, at least as the second category, like SOFIPO, like we can operate and we can scale, like we can provide like reward those balance up to 14% a year. We can basically use those deposits to fund our credit receivable. So that's allow us to scale our operations like in Mexico.
Thank you. Can you talk a little bit about Brazil?
Well, in Brazil, you can issue, for example, a digital account if you are a payment institution. This is regulated by the central bank. You have to obtain a license. With that, you cannot grant credit, but you can do credit through credit funds where you get funding from private investors, and you guarantee a determined type of compensation for them. So this is the way we grow in the beginning. We call that FIDIC. This is not regulated by central bank, but by the CVM, which is the same institution that regulates the stock market. So it's a bit more expensive than the traditional funding, but it enables you to operate in the credit arena. Once you get stronger with more musculature, etc., we can become then a financial institution. We acquired one last year, so we are now capable of doing our own funding ourselves. So our customers invest in our papers within our platform or through third parties selling our papers in the market. So we are capable now getting funds from our own customer base, and we are a financial institution regulated by central bank. Of course, that there are some tiers. We are smaller than the big ones, but we have the presence of central bank very constant in our discussion. They are aware about our process, our number, etc. So we are part of the system. So in the end of the day, if you're not a financial institution, you can grow your business through the credit funds. This is how most of the fintechs do in the beginning. So they raise a credit fund, they capture investments from private players, they actually guarantee a compensation of your interest rate plus X, and start operating, granting credit, of course, in a higher rate than that. So the fund itself is publicly open for everyone to look to the numbers, etc. This is the way you grow the business. But in the end, it's not scalable forever, because if you're big enough, you're not going to get so many investors willing to put the money. So if you are growing fast and strong, you need to become a financial institution and then be part of the ecosystem regulated by the central bank, who, of course, has the interest of enlarging the competition. So as mentioned here before, it also happens in Jamaica. It's a concentrated market. In Brazil, the same. So you have the top 5 banks basically dominating everything. So there is also the interest of the regulator that, look, let's get more competition, let's stimulate this environment of fintechs, of course, taking care that these guys are promoting a healthy and sustainable growth. So we're not going to allow people to commit mistakes and put the system at risk. So it's very well regulated, and you know, I think it's a matter of scale and timing. You start doing your business using the credit funds, having a partnership with some other financial institution. As long as you grow up, you need to become a financial institution and need to be more regulated, to present all types of specifications required by the central bank, and you need to be part of the ecosystem. And there is a vested interest from the regulators that this ecosystem becomes more and more diverse.
Thank you. So before we open up for questions, can I just ask you, what's the one regulation that you found the most important in terms of operating, and the one that is the biggest hurdle for you? Since we are speaking to central bank, the regulators.
The minimum capital requirement is the most important one, of course, because this maintains the system under control, and ourselves, and also targeting the quality of our assets. So this is, for us, is the main driver. I wouldn't say everything else. Being compliant is a lot of work, because you need to create processes, areas to handle all types of requests, etc. So there is not a single specific regulation that is difficult to, or is an obstacle. But being part of the ecosystem requires from us discipline, processes, organization, etc., that were not so common for a startup. So we need to organize ourselves. It's not that we are, it's like playing in the playground now, you're becoming an adult. If you're part of the game, you're regulated by central bank, you must establish your processes, your disciplines, the type of information that are asked. So this is very hard, particularly when you are growing up so strong. So we came from 400 or 500 employees to 1.5 thousand in a matter of 2 years. So imagine the chaos. So you need to manage this type of entropy, but all types of requests coming from the regulator come first in our priority list. So cannot, we do have a business to run, but first of all, if this is a regulatory issue, we must attend. We must establish ourselves the process, etc., that fully comply with what they're being asked. So it's not a regulation itself, it's all the ecosystem that demands that you are organized, structured, disciplined, have all the information in place, etc. Coming from a startup, coming from scratch, this is hard. So it's a growing process. It's a pain of growing, but you need to do that. So we're still facing our challenges. I came from the financial market. I worked in Citibank, in HSBC, in Barclays in my previous period. So of course that we are not as well organized as those guys, but we are doing our step by step. We are improving. So attending the regulators is definitely one of the non-negotiable items in our agenda. We need to comply, and we need to be prepared no matter what. You need to create structures that comply to it. So, it's a pain every day, but it's necessary.
Just want to compliment, I think every startup has the same, on these fintechs, the same cycle. I think it starts with friends and family capital, and then it tries to go for some venture capital, like other external investors. And then they start expanding their credit offering only with this equity, and that's really expensive. And then they look for maybe some credit funds, set up some debt in the market with set up some warehouse facilities. And then when the regulation, and then everyone applies to the regulatory, let's say, institution like that to have those licenses in place for then actually operate on top of those deposits. And basically, until they get to that deposit level, they are basically, we have to manage with a lot of expensive capital. And what happened is that during this whole process, we have to basically come back, I think, return high interest for the customers and so on to make the math work. Those warehouse facilities are much more expensive. You're talking about 14% a year, it would be at least 25% to cover those fund costs. So as you can speed up this process from beginning, from the inception to actually being able to operate in a proper leverage deposits and reward those deposits to fund those credit receivables as fast as you can ensure this cycle, I think it's best for the company, and it's the best for the customer base and for the population, because we can return it back with better terms for the customers.
Thank you very much, Rafael and Victor. So maybe we can open it up for questions. I can feel a lot going on on this side, but anybody? Okay, yes, please.
Yeah, Gide Lewis, Bank of Jamaica. So, question for both of the panelists. Thank you. Very, very interesting presentations. From a meeting in Brazil and in Mexico, your anti-money laundering and terrorism financing obligations, did your business model help in meeting those requirements, those regulatory requirements? Or maybe another way, how did you meet those regulatory requirements from your respective regulators?
This is a challenge, particularly in markets as Brazil and Mexico, who are target for fraudsters all the time. So in the end of the day, and of course, that this is a vulnerability of a digital account, right? So as it becomes so easy to open a digital account, you open the gate also for the possibility of money laundering, fraud, etc. our acquisition process is robust in a sense that it requires that you have your picture, the picture must match your ID. So we refuse a lot of applications by not matching the indicators of the person within its own face, etc. So there is a kind of guardrails in the beginning, right? And also, once the account is opened, we monitor the activity, and we monthly close a lot of accounts with suspicious activities. And also there is a kind of collaboration among banks, because you see things going on in a different way. You are advised by other bank, this type of transaction here, you go check the activity and you cancel the account. We do that. But the anti-money laundering effort is continual, because it happens particularly now that in Brazil you have a PIX, which is a mean of payment sponsored by central bank, that everybody uses PIX, so you transfer money very easily from a account to another. So it also creates a possibility of fraud activity, and as well as money laundering, because it's very easy to, distribute your money through many accounts. And in the end of the day, you have to monitor the suspicious activities and cancel it. So although I would say we are well equipped in the front end to avoid fraud by doing digital verification, etc., it's still a challenge on the ongoing activities of an open account. It's a challenge to identify, those who are dedicated to illegal activities or so what. So we do monitor that. We do cancel the accounts. We do communicate the regulators, but it's a continual effort. Okay, and this is a issue for the industry, right? So I wouldn't say this is a solved type of situation. It's there every month. We face our problems, and we have to close accounts. We face fraud issues, etc. It's part of the risk of doing this business.
Just complimenting, I think, Victor, it's in Mexico we usually say that fraud is like a national sport, so. So yeah, I think I think the amount and the issue is that we cannot. There's no law enforcement in Mexico against fraud, so I think you have to beat them through like data technology process in place. And there was one actually benefit by being regulated in Mexico. That's basically in the government there has a face database. Basically, everyone who gets a national ID, like basically they get stored their face, like the photo, like basically that goes in the ID. So, and there's a providers that basically you leverage to do the match between these database from the people who is applying for a digital fintech and so on. So basically you can see actually, oh, that person with that information, that photo is actually the person that's in the government database, person that gives a lot of confidence on to reduce, for example, like account takeovers or people trying to impersonate being other persons. Like, so it helps a lot against this fight against the fraudsters. But again, as Victor said, for regarding like anti-money laundering, it's a continuous like day-to-day process to have like evaluating all the money inflows, outflows on continuously, like, because we know usually like what to expect from those users, how much credit line they have, like how much did the average deposit base as well. So we actually every day, I think, blocking account and reach out to those customers, understand their situation to see actually there are actually people trying to, I think, do some sort of like being bad actors in the system, or actually like real people that actually leverage our bank account. So I think it's a continuous exercise of monitoring. Like we have a dedicated team as well, only to review like building those policies and keep monitoring those money movements.
Okay. Any other questions? Governor Biles?
Yeah, I found it interesting that in both instances, the banks start with credit. So it's funded by family, friends, maybe loans from others, and then they lend it out. And after they've kind of mastered that aspect of banking, which is credit, they then get transformed into financial institutions. In Jamaica, we have over 160 microcredit enterprises, all private sector. Some of them are even substantial with thousands of credit customers, and some of them are even on the stock exchange. So they're really ripe for becoming institutions like yourselves. What I think is not there is a digital backbone that is going to make that process seamless and efficient. And so it's a challenge that we should look at, how to address those institutions to see whether they have an interest in becoming more fully fledged financial institutions, and to begin to shepherd them in a direction of being digitized thoroughly and in all of their processes. So I found that very interesting. We have fertile ground here.
If I may just ask a question. I mean, that's a good point that the governor mentioned, that we have a proliferation of small entities that provide credit to this same sort of segment of the population. But to transform to the side of the business where you actually take deposits from customers and you intervene in a payment platform, was a real-time payment system in place prior to the emergence of your institutions?
Yes, that, for example, in Mexico, like, by the moment I think we launched our institution, there was the equivalent of PIX, so that's a real-time 24/7 system, transfer system that customers could basically from institution to institution, like that has been for more than 20 years in Mexico right now. So basically when we started with credit and then we go with the debit, like this same path, I think.
Sorry, am I asking the question the right way? A digital real-time payment, meaning something you could access on your phone, was that in existence?
No, that existed before in the traditional banks. So like in the years before, not much long before, but traditional banks were providing at the moment, like at the time we launched it, they have some apps that can basically use make real-time transactions and payments as well. Again, experience-wise, not great, not perfect, but I think they had an equivalent solution for that. And then just I think to complement there, I think maybe I usually say that it's easy to go in the credit path first because it's easier to give money for people than get their money first. Okay, like banking is the reason of trust, like and going to that path, and then when you go once you're providing that and customers enjoy your product and leverage and paying back and so on, and then you go to the debit one, I think it's where usually you also have to provide some, I think, being competitive in terms of like how much you can reward that money. I think that's another thing, because that's why someone would take their money out or like from the financial system if they have accounts in other banks, or if they don't have accounts, like, so why they would put money in your account. Okay, so I think the benefit should be clear, and usually I think rewarding that money back, I think usually the best, and usually banks they try to reward the least as possible, like that money, those deposits. So I think that's another factor that you can leverage, and those fintechs leverage to ramp up that deposit space.
I would say that having those credit communities, as you mentioned, already established is half of the way, because this part is also difficult. Granting credit for this population is not easy. So one aspect is do you have the technology to do that? But this is not enough. Also, granting credit is a challenge. So if the environment is already used to that, it's a good big step, because then you need to provide also the technology. There is challenge here in our environment of a lot of fintechs that failed because of bad quality of credit, right? So you have access to technology, great, but how you ensure that you are doing well in granting credit? Again, because remember, this population is riskier than average. So you need to know how to deal with it. So you have capital requirements. Your levels of delinquency should be, at a determined point. So it's not that easy. So if the ecosystem already have credit communities that know how to handle it, transforming them in a type of technology, maybe it's easier than the reverse, making it someone skilled in technology know how to grant credit. That's not a simple equation. So you need to have some financial credit risk background to do this activity well. So I would say you're half the way. If just, fix technology, if you do have those so many communities, that shouldn't be difficult.
So we've run out of time, but I know there are two other questions, so maybe we can get the two questions together, please, and then you, and the gentleman in the back, I'm sorry. And then if we can answer very, very quickly, and then we'll move to the next session quickly. But if not,
That would be an answer yes or no.
exactly, yes, no, move on. But there will be a little bit of time afterwards, after the sessions, to discuss further. But please, if we can have your question.
Okay, how important was a robust, credible national identification system to your business, one? And two, do you operate parallel to the traditional payment schemes, the Visas, MasterCard, which comes at a cost relative to a local, no-fee-based type transaction system?
Okay, and maybe we can add your question.
Yes, Ramokan from the Bank of Jamaica. My question is in relation to what safeguards do you have in place against cyber threats in particular, and of course the implications in terms of data privacy concerns. You did mention that trust is a big issue to overcome for the underbanked. How do you address that issue? What safeguards and measures do you have in place?
Yes, there is a full base of identification. So each citizen has a ID. Then you have this ID. If you have some type of credit history, it's there over in the bureaus. There is a positive bureau already being stated for some time. So the environment for the identification is good enough. We use Visa. So our cards are branded by Visa. We have a cost over it, but it's a cost of doing this business. So we in order to get acceptance everywhere, you must use one of those brands. So it's Visa, MasterCard, whatever. So it's part of it. It's part of the cost of doing business, period. So we charge the interchange. Part of it goes to the brand. And yes, we do have, I would say that this is security, information security is one of the major concerns. So we will have a session only to talk about the preventive actions, the database issue systems that we build around it, but it's a continual concern,
Yeah, like in terms of cybersecurity, I think we do have like a security team just dedicated to guarantee that. Okay, like Mexico, for example, the database must be in Mexico, so we have this challenge of, okay, we leverage the cloud service solutions, but we have to guarantee that the database is in Mexico for like regulatory purpose as well. Like, so I think it's we do extensive like penetration tests as well to see like for third party like companies, consultants, companies guarantee that the data is again, it's well preserved, so it's not going to be leakage as well. But again, this is the kind of thing that evolves really fast, those hackers and so on. I think they're always going to be attempting, like we do see some attempts from time to time, like, so I think it's a matter of like some attacks and so on, trying to like, but again, it's a matter of like having like this strong security team, like always like taking care of that to avoid again those breaches to happen. Hopefully until today, it never happened. But again, those are the kind of things that you can do whatever you want. But then if there's a new technology, a new solution that can penetrate and so on. But again, it's a matter of trying to keep, I think, understanding what's going on in the market, what's the last solutions, what's the last attacks and so on, and guarantee that we are on top of that.
So thank you very much, Rafael and Victor. 1 hour is never enough, but I do encourage a big thank you for traveling here and also for sharing your insights. And as I mentioned earlier, the experts will be here for a little bit afterwards. So if one-on-one conversations, exchange of that, and if needed, maybe we can have a virtual session as well to continue the discussion if we feel it's necessary. So thank you very much, and I invite my colleague Leila to come.
I'm with IFC. I lead our Latin America and Caribbean fintech investments. So we're super pleased to be here and be able to offer these sessions. In this next session, our speakers will share insights on payments, on open finance, and their experience in Latin America, and specifically Brazil. We're seeing that payments and open banking models are allowing new financial sector players to develop financial products and services and leverage existing financial sector, but then also in new ways. So we're super pleased to have two representatives here from leading payment companies in Brazil. We appreciate you coming to Jamaica for this. Just like the last session, we'll have 15 minutes after we go through some moderated questions on their presentations. So maybe to kick off, we can hear introductions from Stone and from Doc, and let's start with you, Vinicius. Vinicius Carrasco is the Chief Economist and Regulatory Affairs Executive Officer at Stone and Stone Brazil. So thank you,
Thank you so
Vinicius.
much. It's a pleasure. It's an honor to be here. So thank you, IFC, for the invitation. Thank you, Bank of Jamaica, for hosting us. Governor Biles, thank you so much. The Honorable Minister Clark, a pleasure. So I heard, you know, the introduction by Minister Clark, and he mentioned the huge banking concentration in Jamaica. So we had sort of the same in Brazil. So the end of hyperinflation in the 90s led to huge concentration. So banks, before the end of hyperinflation, they were taking deposits, not remunerating those deposits, and putting the money in inflation-indexed short-term government bonds and making lots of money. So once inflation came down, this business strategy collapsed, and we had really huge concentration, consolidation of the market. The great financial crisis also intensified this process. So we saw some big M&A operations approved based on systemic risk concerns that led to even larger concentration. But things are changing in Brazil. And why things are changing in Brazil? I think there are two dimensions that are leading to those changes. So first of all, technology. So as being discussed here by Vitor and Rafael, with a phone, you can open up an account, make transfers, get loans, and so on and so forth. But the other thing that's very important is regulatory innovation. So technology per se and alone won't do much. So regulation and governance is key. So I'll talk a bit about it during the Q&As. But before that, I'll make a short presentation, not exactly about Stone, one slide about Stone, the other slide is a bit about what happened over the last 10 years in payments in Brazil. So this is a map of Brazil, and this is how Stone has evolved geographically since 2013 when we were founded. So we started in the main centers in Brazil, so São Paulo, Rio de Janeiro, and we started expanding towards less populated and less urban regions. So now in 2022, I think this is the graph we have, but we have a more recent one with 2023. Is that 2023? I cannot say. 22. So it's even more, you know, green, the Brazilian map, and green is the Stone color. So good color, no? Exactly. So we're expanding. We're moving west, so to speak. This is, I thought there was only one slide about Stone, but this is the second one, and I promise it's the last, or I cannot commit to that, but I think it's the last one. So this is, you know, the profile, the income profile of our clients. So we started in very rich geographical locations. This is a census tract type of info. And we're moving towards attending lower income types of clients. So again, this process of spreading throughout Brazil is also leading to a process of having clients which are much more vulnerable, so to speak. And this is an industry number. So on the left, you can see the number of POSs, those devices in which you make credit card payments. So starting 2012, we had a very small number of POSs out in the streets. And as the process of entry took place and became important, you see lots of devices, and pretty much everyone in Brazil, every merchant in Brazil, even, micro merchants, those selling stuff in the streets, have their own POS devices to process and to accept electronic transactions. So this process is also related, of course, to a transformation in the economy in which, economic agents, instead of accepting cash or taking cash, they're taking electronic payments with all the gains and the efficiency gains that this process leads to. So on the right graph, you see merchant discount rates in Brazil and how those rates have really collapsed after entry of new players. And was regulation that led to this entry, and regulation that led to this, better conditions for merchants in Brazil. So the credit rates are kind of returning to a bit higher levels because of monetary policy tightening. So everyone needs funding to, induce credit card transactions by merchants in Brazil. The payment cycle in Brazil is a bit different. So merchant receives 30 days after a transaction is made, and we prepaid when they desire that we do so, those transactions, and funding has become a bit more expensive. Hopefully, the process of controlling inflation will be as successful in Brazil as it is in Jamaica, as I learned, and interest rates will go down again, and those process of reducing MDR rates for credit transactions will keep on happening. So this is another sense of increasing supply. So as I mentioned, the payment cycle in Brazil is a bit different. So the merchants receive in 30 days, and they decide on average to get prepaid by acquirers, by banks, by whoever. There's another instance of regulation that allows them to pretty much be prepaid by whoever they want to. So these are volumes of prepayment. So you see really an increase in the supply of this liquidity provision. So especially by independent acquirers. So the green capture the volumes by independent acquirers. The blue is the volumes by standard banks. Again, prepayment discount rates on your right. So you see that prices are going down, and monetary policy tightening are leading to a small increase in rates, but the pass-through has been less intense because of competition. Here we have PIX. So PIX is a instant payment type of solution that was brought up by central bank. So the central bank provides the infrastructure for PIX transactions and also set the rules. So this is very important. Governance is very important, and it's a huge success, as you can see, and you can compare, how fast PIX got into minds and hearts of Brazilians compared to other locations. It's really incredible. And on your right, that's something that's very interesting. So the fact that PIX was made available to Brazilian citizens led to an increase in accounts. So in order to receive and make a PIX, you need to have an account. So the process of providing this instantaneous payment method to Brazilians led to an increase in banking and bank accounts in Brazil, especially coming from digital players and entrants. I thought was my last slide on Stone, but I had really the last one here. So I guess entrants also play a very important role in enabling the use of PIX. So PIX can be used as a wire transfer, as a P2P type of transfer, but can be used to make payments and make purchases in venues and in stores. And the distribution that Stone has, that map that you saw a couple of slides ago, allowed us to really induce more use of PIX by merchants. So I guess Vitor and Rafael were asked about whether they issue standard card schemes. So they're very important in Brazil, but you can also make payments and make purchases in Brazil using PIX, and acquirers have been very important in the process of intensifying this process. This is all I had to show you in the first moment. Thank you so much.
Great. Thank you very much, Vinicius. A lot of green, the whole map. It's
green.
almost getting covered.
And I like your jacket.
And my jacket, yes. Was not coordinated. Maybe we can turn next to Antonio. So Antonio Suarez is the CEO and co-founder at DOC in Brazil, also in the payments and open banking space. So could you give us a brief introduction and tell us a little bit about DOC?
Of course. So first, thank you for being here. It's amazing to see a lot of people together thinking about how to increase competitiveness, how to increase financial inclusion, and this is something that really we are doing a lot in Brazil. So first, I would like to give you a background about DOC, because we are an infrastructure company. And one of the things that we do in Brazil and also in Latin America, it is providing infrastructure, not only technology, but also regulatory for companies getting into financial service. As you mentioned about the invisible barriers, one of the invisible barriers is access to technology. Because technology, especially for financial service, because you have know your customer, you have compliance, you have fraud, you have a lot of things that you need scale. And we are providing this technology for any company, any size, in Brazil, in Latin America, to use our technology in two ways. They can use just as software as a service. If they are already licensed, they just can use our platform, and they can use also our license. They can start under our license. Why this is so important? We mentioned here about know your customer, compliance, and especially how to regulate a lot of companies if they are not under regulation. And this is one of the things that we are doing in Brazil. Since we have this regulation in Brazil that allow us to be a payment institutions regulated by central bank, everybody, every company that use DOC, they are regulated automatically. So instead of central bank has to control and regulate 300, 400, 4,000 companies, they just regulate DOC. And one thing that is important, we work as a kind of hub for central bank, and we work for a kind of a laboratory for these companies. They start with us. If they grew a lot, they can go to their own license way. And if you saw in Brazil, we have 111 fintechs in numbers of the central bank. Under DOC, we have 103. So we have almost the same number that all the fintechs that are registered in central bank. Why this is so important? Because when you have a lot of these fintechs, they know a lot their final customer. It's different from a traditional bank. It's different from someone that is working in a niche. If you were I love the example that we have in Brazil. Like we have 2 million independent truck drivers in Brazil. 2 million independent truck drivers. Who knows this person better than the transportation company? It's not their bank. The transportation company knows this truck driver better. this company could provide better credit. This company could provide better financial service for this trucker driver. But they need to be regulated. They need to have a lot of technology infrastructure. And DOC provides this for this kind of company. This is one of the beliefs that we have, that is embedded finance. Embedded finance is transform any company, any sector, any size in a financial service provider. And since we have a lot of technology, since you have a lot of scale, we can transform very small companies profitable because they don't have to invest a lot of money in technology, and they can deliver regulated service for their population. And, oops. Yeah, so this is one of the things that we do believe that embedded finance could change the financial inclusion landscape in Latin America and all the companies. And I really do believe in the world, because once more, if you look in Brazil, we have retailers, a lot of retailers providing financial service to their customers. You go to a retailer once a week, sometimes in the supermarket 2 times in a week, in your clothes store 3 times in a year, and you have this relationship, you have this knowledge. The company, the retailer has this knowledge to provide financial service to this kind of company. You have your telco company, your telephone company that knows you, that knows how do you use your services, etc. This company can provide. And the first phase that we saw in Brazil, it was in financial inclusion, and Vitor from Neon mentioned this, it was giving a digital account for the person. This is the first important thing. But it's not enough. Credit is very relevant. Credit, financial inclusion with credit, it's so important as health and education for the population. If we want people to develop themselves, if we want people to create their own business, if we want people to improve their capabilities to get a better job, we have to have these financial services in the right way for each person. We are in a hyper-personalization era. So it's not just one product that will fit for all the population. You have to know, and what are the best companies to know their needs? It's the company that is closer to you. This is a little bit of what we are doing in Brazil with DOC.
Great, thank you very much, Antonio. Super useful. I think that leads me to maybe back up and ask one question, and maybe to both of you, which is, you know, people think about open banking, open finance, embedded finance in very different ways, and it can mean different things to different people. And there's a lot of innovation in the space, and particularly, I think, in Brazil, we've seen a lot. Could you explain in your words and what it means to you at your company and in Brazil, what is open banking and open finance and payments? Who wants to? Vinicius, thank you.
So first of all, So I think that Antonio brought a very interesting point, so also related to competition. So entry is hard in markets in which you have economies of scale, large fixed costs, and a player like DOC, and this was the vision that Stone had in the beginning. We are focused on small merchants, but we also serve as an infrastructure, as a service type of player. By allowing the existence of players such as DOC, you reduce entry costs because, business don't have to put up the fixed costs, the fixed capex. They don't have to put up with the regulatory requirements, which most of them are fixed. So it's very, very important to think about this type of infrastructure platform players. So just to complement on what Antonio said. So my view on open finance is really related to what's going in Brazil. So by a technological restriction, the information which is ours was, held exclusively by the banks we had relationship with. So information is mine. If I repaid or not a loan, if I have, money getting into my accounts and so on and so forth. And this might be useful to other players. By a technological restriction and a regulatory restriction, those informations were kept exclusively by the banks that I had relationship with. So open finance is a way to share information and to allow for sharing services as well, but this is not all. You have to build the pipes. So you can have a very good regulation which says that you can share your information, but if you don't have the infrastructure, if you don't have the pipes, if you don't have the highways, that won't do any good. So open finance for me is a regulatory instance in which you recognize that the data is the users, it's not the banks, it's not the financial institutions, it's not the payment institutions. Two, being theirs, they can share that information to whoever they want, and this is useful. If you want to provide credits, and if you have players with different access to information, competition won't be as extreme as it could be. So I'm a microeconomist, and I studied auctions in my previous life. If you have players with different amount of information, the competition won't be so intense. So the winner's curse reduce competition. So in order to reduce the winner's curse in the banking bids, you have to provide information to everyone. And three, the construction of pipes, of highways, the infrastructure. And governance is very important for that, so we can talk about governance later.
Just to add here about open finance, one of the things that we saw that, like Vinicius mentioned about building the pipes, you have waves. Because you cannot talk about open finance if you don't have financial inclusion. You cannot talk about open finance if you don't have digital account penetration. This is one of the things that Brazil works well. The second point here is data sharing is very important, but payment initiation is something that we are starting in Brazil. It's part of the open finance. Because the first phase it is, okay, I'm gonna share my information with everyone to get better deals. The second it is, I'm gonna share my account, my payment, my mean of payment for anyone to start a transaction in my account. This is very good for the business. This is good for user experience. This is good for recurrent payment. And this is good also if you have instant payment instead of using the traditional ways that Visa and MasterCard are very common. You can do a kind of direct transaction. This is very helpful for the system. This is very helpful for the client. This is very helpful for the companies.
Can I add one thing?
Of course.
So related to what the Honorable Minister mentioned, so for portability of deposits.
Exactly, exactly. This is a kind of rail. As you mentioned, this is one of the pipes that will fight these invisible barriers. That's why open finance and open banking are so incredible. I think they are not in the same stage that we have as real-time payments in Brazil, but they will achieve the same stage.
No, thank you. I think one of the questions that we have, and I wanted to ask you both, and I realize that some of us who are in this space all day long know exactly what you do. But could you each tell us, like, a little bit more briefly, like, what exactly do you do, right? Like, what's the model? Just very briefly, so that the audience also better understands what the product is, what the service is, and what you're doing. Thank you.
I can start. So basically, we are an infrastructure tech company. We sell software as a service. We charge our clients per transaction and active account, basically. So since we are handling 70 million active accounts in Brazil, we can share to our clients our scale. This is very important. This is the first. The second model that we have, since we are a regulated entity, since we have all the obligations of compliance, know your customer, laundry money, and we do all the investment to do it, we charge a fee that we call license fee. That is a percentage of the deposits that we get. That's very important if a company just wants to start to getting depositors to open a digital account, to issue debit cards, to participate in real-time payments in an indirect way. They just have to pay a very small percentage of their deposits. That's the basic model.
Yeah, and as we like to call banking as a service, so it's really the rails behind it, right? Accounts, account opening, being able to process cards, and you even have banks as clients. So.
Yeah. And this is,
So you can use mine. Not working. Let's try this one.
no. And we have, as you can see, we have not only banks, but we have consumer good companies, because technology become a kind of commodity in nowadays, because technology is something that you need to evolve together with all the consumer needs. And we are talking here about our ecosystem. We are not just talking about everybody wants to move together. New companies like Stone, the regulator, the tech companies. So basically, this is why we serve traditional banks in Brazil, we serve some acquirers, we serve some digital banks, and also consumer good companies in Brazil.
Yeah, and maybe just, I'll let you go in a minute, Vinicius, but just as like a, a very real example in the embedded finance space. So I don't know a large retailer, but Walmart, right? So Walmart wants to offer their customers, a card and credit and financial products because it's all part of their services, and that's what you enable as well.
Well, Stone is a company that is a financial and payment provider and software service provider. So we started in 2013 as an acquiring business. After that, I guess we'll talk about licenses later on. After that, we started to provide our clients with an account, a digital account. And we're moving towards providing loans, so insurance services, being a one-stop shop for finance services. We also have a software platform that serves and helps merchants to manage their business. And the vision here is that you should integrate those two services. So do financial and payment services integrated with softwares will allow for our clients to increase their productivity, to sell more, to grow, and so on and so forth. So we have those two branches. One is a financial and payment service branch. The other one is a software branch that we have the vision of a very effective integration of these two types of services for the clients. And micro merchants, so our focus is micro merchants.
Oh, thank you both. Maybe we could, just like the last session, is move a bit to the regulatory environment. So, I know Brazil has seen a lot of regulatory changes in the last 10 years, and, more so are coming. But could you tell us what regulatory license or regime that you operate under in Brazil, what that enables you to do, and anything that's presented either challenges or what's been very advantageous for you in your companies?
So, DOC is a payment institution in Brazil. It's a regulated payment institution. This allows DOC to get depositors, and we can issue cards, debit cards. We can issue credit cards, but we cannot finance the clients. So to finance the clients, we need other license that is not a payment institution. Other thing that allow us is to participate as a direct participant of PIX, that is the real-time payments in Brazil. And it allow us to enable other customers to be indirect participant under our license. This is very important because in Brazil we have nowadays, I think, almost 700 indirect participants in PIX. And why this is so important? Because if you are a retailer, you can use Stone, or you can be an indirect participant of PIX. If you're an e-commerce, you can be an indirect participant of PIX. So basically, this is we are a payment institution right now in Brazil, regulated.
So Stone is a conglomerate, so it's a payment conglomerate. I'll explain briefly what it means. But again, we start as an acquiring business, so we had an acquiring license to begin with, and also what's very important is that the Brazilian regulatory framework allows for sandboxes. So you can start as an acquiring business without a, full license to do so. And once you reach certain volumes, you are forced to submit an application for a license. So we started as an acquiring business. Of course, those who sell need an account to receive those sales. So later we applied for a narrow banking license. Again, funding was not our main purpose here. As Victor mentioned, we used to fund, we still mainly fund ourselves through credit funds. The account was more for the client rather than a source of funding. So that's why we applied for a narrow banking license. And now we have also a license to provide loans, but those loans have to be fully financed by equity. So it's a full equity type of financial institution. And what is key here is that since you have these 3 blocks, and the risks for those activities are small for society, and they do not interact, so capital requirement is much more, so to say, is not so intense. So again, the payment service doesn't bring risk to the system as maturity transformation. So if you're a bank that collects deposit and loans, you're doing maturity transformation, and that would require more capital. Payments don't do that. So a narrow banking type of activity also don't impose any type of major risk, so not necessary to have too much capital requirement. And a full equity financial institution is fully funded by capital, so not too much risk. And then the license granting is much faster, and again, capital requirements are smaller, and this is very advantageous. So you don't have, the burden of a full financial institution who transforms maturity in terms of regulatory obligations.
Thank you. Maybe moving to interoperability. So it's a big word. People talk about it a lot. What does that mean for accounts? What does that mean for open banking? What does that mean for open finance? In Brazil and in what you guys are doing and building your companies, how important is interoperability? And what are you doing about interoperability in the ecosystem?
So first, I think interoperability is something that it's a kind of obligation, because you have to have the right to move your money from whatever you want to whatever you want. One of the things that we look at is here the regulation has a very strong participation to define the rules and incentivize the rules. And we have a lot of cases in Brazil, in acquirer, in recent we have this interoperability rules for voucher meals. That is very interesting. So if you're a company employee and you get paid your voucher meal for a company, you have the right to choose another company. That's amazing. And of course, behind the scenes, that's one of the points that we love to mention. There is a lot of technology, because to do all this thing really works without paper, without bureaucracy. You need technology, you need APIs, you need a lot of things, and you need a lot of security on it to preserve the data of the clients, to preserve the security of the transaction. This is, I think, is the 2 main points in the interoperability right now, is the regulation and the technology behind.
Great. So I guess, well, interoperability might mean different things for different people. So I'll focus in one dimension. So in 2 dimensions, actually. So the technical term that was used for opening up the market for acquiring was card schemes should be interoperable. So prior to the opening of that market, you had an exclusive relationship between a card scheme and an acquirer. So only one acquirer could process master. So the first mention to interoperability in Brazilian regulation was that market should be open, so more acquirers should be able to communicate with MasterCard. So this is one dimension that's very important and has evolved very much so in Brazil, which means you should open markets, pretty much. There's another dimension, which is, I mentioned pipes and highways in open finance. Those highways should connect, should have, means by which you can use one highway and then move to the other one. And this decisions of where to move and how to move should be fluent and seamless. So in this respect, regulation is also important. So regulation was the force that led to opening the acquiring business and opening the banking business and so on and so forth. But regulation was also important to set the standards by which those highways, those pipes communicate. So in open banking, open finance, you have, the central bank setting the guidelines, and one of the very important guidelines is there should be interoperability. The central bank set the governance, so of course you need private players who will run those pipes, will run those highways to see and provide the best way that these highways should be built, those highways should be built. But in a way, the central bank set the rules, so the guidelines are there. The private players sit together, and Stone, along with another player, has a seat in the board of the open finance. And we have to provide the best ways for which, those highways and pipes communicate to each other. So it's very important, it's critical. So you cannot share information if you don't have the pipes, and you cannot share information if the way by which two banks communicate differ. So it's very, very important.
No, thank you. I mean, I think that's what we've seen also elsewhere. The interoperability across all fronts is very important if you want to create a much more open financial ecosystem. I think we just barely have time for one more question so that we make sure we have a time for Q&A. So I'm going to ask you about the future. What do you think, about the future of kind of payments, banking, and the financial sector? Now, you can keep that specific to Brazil, or if you have views on where you think it's going more broadly.
I can kick off here. Yeah. So basically, when we look payments in all Latin America and Central America, Caribbean, we have a lot of cash. Cash is not a threat. Cash is the opportunity. Cash is the way to bring people to the system. Financial inclusion, I think payments should work in how to increase financial inclusion. Through financial inclusion. It's not only a digital account, like I said before, it's how to deliver the right credit. This will create not one of the things that I think someone mentioned here. This is an opportunity for companies make them profitable and also change the way that the world it is today. Definitely, I think payments, it's a very important tool in the world, not only for financial inclusion, but also to get the things efficient, get the things with low cost. This is, and with all the technology that we have in our access today, this is probably, as you mentioned before, the invisible barriers. So this is one of the things that payments can do for the world, that is destroy all these barriers for all the society.
It's really the entry point. I mean, it is the most important part. Yes.
Well,
Vinicius.
the future.
The future.
It's hard to be a visionary.
Crystal ball.
Crystal ball, yeah. So I guess there are two things here. So first, our vision of how the business should evolve. So integrating software and payments and financial services, I think that is the next step. And will bring merchants to another level in terms of productivity, capacity to sell, growth possibilities, and so on and so forth. I guess this is our vision in terms of our business. But you asked a broader question, I guess. I think that the future is very different and very similar. Technology brings a lot, but it's not everything. So financial intermediation is about solving informational problems, providing incentives for good loan origination, mitigating risks, providing incentives for not excessive risk-taking by banks, and so on and so forth. So this doesn't change. So you still need contracts, you still need incentives, you still need regulation. The financial intermediation will not disappear. There's a role being played by those guys. But technology will help a lot. We will allow for this intermediation where those issues of information incentive provision are not key. So there are two different things here that take place when you do finance in a way. And economic textbooks forget about technology and focus on information. And the world seems to be ignoring information and focusing on technology. I guess it's a mid-ground. But technology will allow, and players such as DOC and infrastructure advances and platforms will allow for disintermediation where the intermediaries are not necessary. And I think this will provide inclusion, this will reduce costs, and so on and so forth. But we'll still have banks, we'll still have loan origination, we'll still have regulation, we'll still have ways, we'll have to have ways to mitigate excessive risk-taking and so on and so forth. So, midway.
Great, thank you. I think we have time now. Thank you. For questions? Great, thank you.
Good morning, everyone, and thank you for a very informative presentation. I have, I think, about three small questions, of course, right? Could you speak some more on data protection and how did you put a framework in place to ensure that you can reduce those risks? Secondly, how do you keep the third parties in check? How do you keep them accountable? And then thirdly, you spoke briefly about SaaS, software as a service. Could you speak more on it? Is it that you provide it, or is it that you sort it? And as it concerns that, can you tell me how do you reduce the risks, configuration, data confidentiality, and as well a loss of control? Thank you.
So first, talking about data protection. So the first thing it is in Brazil and all the countries that we operate, we have strong regulation about data protection. The first thing is how to follow all the rules that is set by the regulation. The second one is that we use, it's a lot of certifications. Certifications help you to get the discipline, like PCI, the ISOs. This is very important to have, especially if you were a software as a service provider. So basically, this, I think these are important pillars here. Talking about the software as a service, I think one of the, how to give the control, how to give, this is what the new technology, the APIs world is bringing for this, this new world. That since now that in the past, software as a service, you have to open a requirement to your provider, it's a request, and nowadays you can access your tenant in my platform and you can configure it. And this is, behind it, there is a very strong security system for access grant. There is a lot of technology here, like we have token with a dual authentication, that we are talking about token that that expires each 15 minutes. It depends from what kind of transaction. So there is a lot of things. And this is why it's important sometimes you rely in a company that has a lot of scale, because you have access to this kind of technology. If you're doing by yourself, probably you will not able to do everything.
Well, just to complement, Dito, but to complement, so how you put your partners accountable? So first of all, the regulation relies on you, and you are the one with obligations, you are the one, and financial regulation is very strict. So if you're an officer in a company, you're not protected by limited liability, for instance. So that makes a huge difference. So you have incentives to put those guys accountable. And if they're using you in a way, so again, technologies allows for, platform businesses and infrastructures that are provided through third parties, and they can connect to you. And the threat to cut them off is a very, effective threat. So in a way, since you have all the liability in terms of regulation, and the guys use your essential facility type of service, I guess it's sort of easy to put incentives aligned. The obligation relies on those who are regulated, and this is important.
Just wanted to know how adaptable is Stone as an infrastructure across jurisdictions. So it's operating in Brazil now, but how does can it be transferred to Jamaica and dock and work with our rules, our regulations? How adaptable is it as an infrastructure? Is it dock that does that?
Yeah,
Dock,
mainly.
yeah.
So basically, one of the things that since we have a very common environment, low financial inclusion, etc., 80 to 90% the things that we're doing in Brazil, we do believe that is replicable across Latin America. Right now, we are operating in 9 countries in Latin America. We're operating in Mexico, Chile, Peru, Colombia, Ecuador, Panama, Argentina, and Cayman. So basically, we do believe that, of course, there is real-time payments that is specific in Brazil, but we operate real-time payments also in Mexico because it's, by the end of the day, it's infrastructure. When you get for the card rails are very similar. You have just a few changes in the message, but they are very similar. And of course, there is the regulation that it changes country by country. To give you an example, that what we are doing in Brazil, we are not allowed to do in Mexico because of the regulation. But we do believe that at a certain point, Mexico regulation will move to open exactly the way that we work in Brazil. In Colombia, we can work exactly the same way that we work in Brazil. So basically, answering your question, I think it's 80 to 90% replicable to Jamaica.
Well, I guess the same for Stones, replicable. We're focusing on Brazil in this first step, so to speak, but we plan to take a longer trips. But it's adaptable and replicable.
Great, thank you. If there's not any more questions, just want to thank our panelists very, very much. I really appreciate you coming. Thank you. Oh, he's got, right, one more.
So who are your investors? So when you, at inception, you had an idea on a piece of paper. Who were your original investors? What kind of profile?
I think we have 2 different histories here. I used to work for banks, and I decided to move for a very small company that is called Conductor. It was a credit card processor. And together with Haverwood Capital, that is a private equity, American private equity, we bought 100% of the company, myself and Haverwood Capital in 2012. Since then, we got invested for companies like Viking Capital, Sunley House, also Visa, that is the brand. So we are diversifying our cap table in our company. Our cap table is very diversified right now.
Sort of the same, so mostly we have long-term patient capital investors. We started raising money from those guys abroad in the US. We have some important investors in Brazil as well. So a former central bank governor was an investor of ours, Arminio Fraga, a good friend of ours. But mainly foreign investors, patient long-term capital. So Berkshire, for instance.
You mean Warren Buffett, Berkshire?
Yeah.
And you guys are listed.
We're listed. Yeah, we're listed now. We are in NASDAQ.
How does, like the model in Latin America where you have sort of private real-time payment enablers, right, which is one way of describing what you do, if I'm not mistaken. How does it compare like with the Indian model? Like in India, I believe the real-time payment is owned by the government, if I'm not mistaken. Can you just give us, you know, in Jamaica, we have to decide what we are going to do. And we've seen the Indian example a lot, and we're now sort of hearing about the Latin American. Can you compare and contrast from your perspective?
Actually, there's a lot of similarities. So the first, example that the central bank used to think about how to provide fast payments was India. So the infrastructure is owned by the central bank. The rules are defined by the central bank. I guess India has another piece of infrastructure, which is the identity piece of it, which I think allows for more stuff to be done. But the governance and the infrastructure sort of provided by the central bank is a public provision. In both cases, yeah.
What are the differences in the models?
I think the main difference that is in Brazil, you already have a very evolved financial service system that is connected with the real-time payments network that is provided to central bank. That is different in India. That is basically 2 or 3 companies are more connected. And one of the things that I do believe, if you're thinking about, we discuss here about interoperability and how to be open. This is very important because one of the things that I do believe that is central bank, like in Brazil, they just give it a start providing the infrastructure, but this infrastructure should to evolve among time. So is central bank is the best player to evolve this infrastructure? Right now, I think they are doing the best thing, but probably in time, alternatives should come here. And to have interoperability, to have these openness that we are discussing here, it's always good to be ready for it.
So just to complement, if I may. So again, I guess the issue is governance. So when we started with a fast payment project in Brazil, there was some public consultations, whether the infrastructure should be private, public, whether the rules should be private or public. But the governance was such that only a few banks really could, provide the infrastructure and set the rules. And this would be real bad in terms of inclusion. So as you move along, so I guess public provision is important when governance is a key issue. And interoperability helps to mitigate those problems of governance. Once you set the rules, once you have set the standards, private players will not abuse their market power or restrict access and so on and so forth. But if the governance of the system, of the ecosystem is not important, I guess you can use private provision. And I guess Antonio's point is that as we evolve and as we solve and mitigate all the problems we associated with governance, we can pretty much count on eventually a private provision of those services and infrastructure. I think governance is key more than anything.
Governance, who has access to the system, who has access to be able to initiate, which are important questions. Because if you leave it theoretically just in the hands of the same 3 to 4 kind of who control the financial system, then you're not allowing other players to connect in and to use that same data.
Yep.
Another question. Thank you. Please go ahead.
Good morning again. If you could speak some more on AML CFT, I would say AML CFT fraud. Also, other concerns, identity theft and cyber. I hope all of them are connected. But so AML CFT, I would say fraud. How do you prevent it? How do you reduce it? And identity theft. Thank you.
I think technology is the key here also. And since you have all the system connected, you have to have all the tools like to monitor all the transactions. One of the things that we saw, especially in Brazil, it was the way that you identify the person that is opening an account. At the beginning, it was just a just a plain picture. Now we have a kind of a auto-regulation in the market that is proof of life. No one in Brazil opened an account with just a single photo. You have proof of life. And this is very relevant for the system. Of course, this is not 100% effective because I can get someone to open an account and I can use this account. Then it comes the monitoring. Then it comes, and since you have open banking, open finance, and since you have a lot of data sources available, if you have the right technology to cross the transactions with the behaviors, it's not a kind of, it's tough, but it's feasible. This, I think, it's the two main points. Identify the individuals and monitoring the transactions. And of course, you have a lot of tools that is available, like there is a lot of large databases for AML, international AML, etc. And the way that you take the action when you saw some suspicion, that you have to lock the account immediately, you have to do all the procedures. And in Brazil, Central Bank just defined right now, that is a kind of central database. If I got an account that is fraud comproved, I have to put this account, this social security number on this database. Why this is so important? Because Stone will get this database and see this social security account and say, look, I will not open an account for this guy. This is.
Yeah, I think this is critical. And the difference that we have in Brazil with India, in which you have the payment infrastructure and also an identity-based infrastructure would help on that, right? So, but this information sharing and dotting those who commit frauds or any types of illegalities is very important. It's a public good they're providing, right? You should solve this public good problem. Yeah.
And one of the things that government are so important, that is when you have a very strong national ID, if you have technology embedded in your national ID, this could be used also to avoid and prevent frauds and AML.
Thank you, guys. I'm trying to keep us on time track here. So I just want to thank you very, very much on behalf of IFC and our organizers. Thank you again. I think as Ranke mentioned, I think there may be a break, but there's time if anyone wants to come up and ask additional questions. We'll be around for a while, so thank you. Thank you.